They say the best way to predict the future is to create one. In this video, we're going to be talking about building, protecting, and transfer of generational wealth with no family left behind. My name is Samwel Limo. I'm a licensed financial professional. And today I want to talk about an average American works 40 to 50 years at an average of 80,000 to 100,000 hours to earn a living, but they spend less than 2 hours to acquire the financial knowledge that they need to maximize on the earnings out of their skill. So today we're going to talk about getting that financial knowledge. And for quick disclosure, the information that I'm sharing today is for educational purpose only. So if you need financial advice, seek one. If you need a tax expert advice, seek one. Because I'm here to just give this information for empowerment, to have the knowledge to be able to seek that advice. Also, we're going to talk about some financial institutions here. This is not their point of view. This is just for educational purpose only. So let's get started, because knowledge is potential power, but real power comes when we take the action. And when you believe you can, yes, you can. If you don't believe that you cannot do it, you will not be able to do it. So let's get started together and let's get the knowledge that we need to be able to build the future that we need using understanding of financial information. So let's get started. Welcome. What accounts do you have that will replace your income if you fall sick and could not work? That's a reality that not all of us like to face. But guess what? The number one cause of poverty, critical illness. Look at how many of these happen every year. Stroke, 795,000. Heart attack, 805,000. Cancer every year, 1.5 million. It's just a matter of when, it's not a matter of if. So, are we protected? Is your income protected? If any of this happens to you, are we protected? That's why we're going to discuss about the benefits, living benefits of an IUL. This is really key, because a lot of things that when we talk about life insurance, we think about dying. But guess what? There's some provisions in a life insurance policy that you can have all these benefits structured in it. One of the key items that I really want us to focus on is to understand these benefits that comes in the life insurance. Let's talk about terminal illness, whereby you can accelerate the death benefits endorsement. In this scenario, we're talking about medical condition resulting from bodily injury or disease expected to result in death within 12 months. You can accelerate up to the 1 million policy that you have. Chronic illness, accelerated benefits up to 90% of it. This is 2 activities of daily living. If you cannot able to do any of these 2 activities, you can get up to $900,000 while you're alive. Critical illness rider. If you have an heart attack, stroke, cancer, kidney failure, you can get an up to $900,000 of that, basically 90%. So the goal is, I'm going to be showing you, and we're going to need to schedule a time for us to go through a real illustrations for what kind of benefits you can get to get started today. We need your family protected. And as we go through this illustration, this is just an example for us to be able to move you to the next step of scheduling a time with us to be able to discuss an IUL account for you and your family. Let's get started with this illustration. First of all, I want to say thank you for watching this far, because here is where we get the power of the knowledge that we've learned so far. So right here, I'm going to give you an illustration of what we're going to be able to do to give you, to put in practice the knowledge that you've just acquired. So this is where we're going to show an illustration. This one is just an example of a 30-year-old female that we're going to show how much it's going to cost. I'm using a $500,000 policy, and I'm going to just give you a quick design. So basically, we're going to capture your information right here, date of birth, your gender, and basically preferred risk there, and then we're going to design your policy. The way what you're going to design your policy, key items here to remember, we're going to do the policy amount, which is right here. And we're going to do target. In this case, I'm targeting for you to pay for the next 25 years. So you can pay for as long as you want. You can pay as short as time, but I'm using 25 years here. And then that's one of the key items that I'm identifying there. Then also we have the distribution of the performance of the account. You can see global index account, we put in 25% here, S&P mirrored index account, 25, balance uncapped index account, 50%. So this is just a distribution example. And then you can also target income. So we can target to say from year 66 to year 85, you will withdraw about $20,000 of that money every year. So we can create a targeted amount of income from your policy. There's also the riders, which is basically the riders that we talked about, chronic illness, critical illness, and basically we're giving you those options, terminal illness, to be able to get those accelerated benefits before you die. All right, so let's calculate and see how this looks. All right, and we're gonna go through the non-guaranteed. Basically, it gives you that on year one, you're 32 years old, year 33, as you can see the cost, initial premium, $345, and you can pay as high as $27,000 a year. So minimum 41, 45, you can pay as high as $27,000 a year, and you can see right here how much your policy will be. On year 33, your premium is $41,700. Policy value $3,021. The death benefits $500,000 and $3,021. Let's look at year 4. Okay, you paid $16,000. Value of your policy $13,000. You have an excess of $4,329. That's how much you can borrow. The death benefits $513,000. Let's move to year 10. You put in 41. Your policy is 38. You can borrow $34,000. Okay, so you can see how this money is growing. Year 25, you already put in $103,000. The policy is 169. Cash value 169. The death benefit 620, and you start paying. So you can see right here, you start paying and your money keep growing, keep growing, keep growing. Year 65, you have $262,000. Your cash surrender value is 262. The death benefit 762. And based on what I had put in there, you start withdrawing some money. So this is the design of just how the policy works. Okay. A lot of people will talk about, oh, I want to be transparent here, because some people are like, oh, you know, the cost of insurance versus how much interest and all that. So let's look at this right here. We have, this is where I want us to focus. Yes, on year one, total charges is $1,150. Credit interest $26. But time, this is a long-term investment kind of deal. So look at year 7. Year 7, total charges to the account is $1,530, but guess what? You're getting an interest of $1,531. Then from there on, the interest that you're getting from your account is always higher than the total charges. All right, so you can see how it goes. And also the cost of insurance here will keep going up as the year goes. But guess what? You're getting more money here. You're getting more money here. And if you didn't start withdrawing here, it will always keep growing. So this is just an illustration. That's why we need to schedule the time for us to be able to go and design your own. So reach out to me, use the link below this video. Let's have a scheduled moment so that we can go through your policy and start protecting your family from today. Thanks for watching. This is Samwel Limo, your financial professional, and I look forward to helping your family to get started in this journey of protecting your family. Thank you. And guess what? That's the end of our video. And I look forward to receiving a call from you, a text from you, or using the link below this video to schedule a time for us to go through this journey of protecting your family. Thanks for watching. Thank you.